Guys, it seems like every morning you wake up right now and you go look at stock prices, they are down. It seems like every day when the market closes, you check in, hey, is the market up today? Is the market down? You automatically assume the market's down. We're in that type of stock market right now, where literally day in and day out, the stock market is going down, and it's just like an expectation that the stock market will continue to go down. That is the market we are in right now. And so I want to talk about two very important things in depth in this video here today. I want to talk about why the stock market continues to go on, all the things that are going on right now. And I want to explain that because a lot of people are like, why does it keep going down? Is it just because of the Roni situation? Is there something more there? We're going to talk about that, okay? And the second thing we're going to talk about is what to do in the market right now and what to not do in the market right now. We'll talk about both those subjects in depth in this video as well, okay? Make sure you smash the thumbs up button for this video. This is probably the longest prep I've ever done for a video. It took hours to put all these slides together today. I'm going to show you a lot of great information, so I hope you guys really enjoy this. You can pay me by smashing that thumbs up button. And by the way, today's video is going to cover a lot, so this might be one of those videos you come back to and watch down the road, whether it be a day from now or a few weeks from now, because there's a lot we're going to cover in this video. Like, it's a really, really in-depth video, needless to say, okay? Now, first thing I just want to point out here is how fast things can change in the stock market. I was putting out videos like this, like just 2 or 3 months ago. The stock market keeps going up. Do this now. We're talking about, people getting too overly confident, not putting in the work. I talked about, people not keeping cash around. I was putting out videos like, is the stock market going up too fast? Are stocks overvalued? We talked about PE ratios. A lot of PE ratios were getting very elevated. I did a video, big problem I found in the stock market. Let me explain. That was where we talked about stock valuations. So I was just putting out all these videos literally just like 2 or 3 months ago. And we went from that scenario almost overnight to a scenario where now I'm doing a video here today that the stock market just keeps going down day after day, and what to do now. I mean, it's crazy. That's the stock market for you. That is how fast things can shift in the stock market, where 1 minute I'm preaching about PE ratios getting too elevated, people getting too confident, and also keeping cash around, and now all of a sudden we're in a completely different situation, almost in the snap of fingers. That is the stock market for you. It can go really bad really fast, and it can also go really good really fast, okay? Now, with my reach out there on YouTube, between my main channel and my second channel, I almost feel, you guys ever seen that movie Blues Brothers? I almost feel like, there's a scene in it, they're like, we're on a mission from God. I almost feel like I'm on a mission from God with my YouTube channels to kind of preach whatever the opposite of however the market's feeling. So if the market's feeling super pessimistic, super like just down and just all negativity, I feel like it's my job to come out there and kind of put things into context and kind of give a little optimism out there. On the flip side, when the market's just skyrocketing, PE ratios are going insane, and everybody is super optimistic, I feel like it's my job to come out and talk about cash levels and talk about why it's important to put in the work and not getting overconfident in those sorts of things. So I feel like I'm kind of in this like mission from God, and like this is like one of my missions in life to do right now, okay? Now, is the stock market really just continuing to go down? Well, I mean, let's look at the stock market today. Yeah, Dow, I mean, this was not a bad day for the Dow, and that's saying a lot, okay? The Dow was down over 3% today, and that was quote unquote not a bad day for the Dow Jones Industrial Average. I mean, that's how bad things have gotten in the stock market, where a 3% day is like, oh, that's not that bad, okay? The S&P 500 was down almost 3% today. The NASDAQ, surprisingly enough, I think a lot of it was because Amazon stock was up, and Amazon has such big weight on the NASDAQ, but believe it or not, actually, the NASDAQ was only down 0.27% today, which is amazing. But the fact is the trend is down and down and down. The Dow Jones Industrial Average today reached another new 52-week low, and it seems like every single day it reaches a new 52-week low right now. I mean, that's just the way it is when it comes to looking at the Dow Jones Industrial Average or these averages in general. I mean, look at it. I mean, it's incredible. Over 29.5 the Dow Jones Industrial Average was just like, what, 5 weeks ago, 6 weeks ago? Here today, we're trading in the 18s, 18,500. I mean, we're talking 11,000 points lost in a 5-week span for the Dow 30. That is extraordinary. Look at the S&P 500 index. The S&P 500, new 52-week low. It's just another index that, I swear, it reaches a new 52-week low almost every single day. 5 weeks ago, S&P 500 is trading at nearly 3,400 for the index, right? Here today, it's trading at 2,200. I mean, you could have pretty much asked almost almost anybody, where they foresee a situation where the stock market goes down 30% plus, the indexes go down 30% plus in a matter of a 4 or 5 week span. And most folks would say probably not. I mean, that's super unrealistic. And it has happened. The NASDAQ was approaching 10,000 5 weeks ago. The NASDAQ here today is 6,800. And the only reason the NASDAQ's held up kind of well, if you can even say that, right, is because some of the big tech companies are kind of trying to hold it together, needless to say. Otherwise, that NASDAQ would be, 5,000 range right now, needless to say, okay? Now, look at this pace. Stocks post the fastest 30% drop ever. We're talking in the history of the stock market, in the history of the US stock market, we're number one for the fastest drop ever. 22 trading days is all it took for the indexes to drop 30% plus. The next closest was 23 days, and that was back in 1934, okay? Then you have to go to 1931, 24 days. Like literally, we are number one, okay? Like everybody, I feel like we should pop a champagne bottle, but not an expensive one because this has been a drop. But I feel like we should celebrate the fact that we have been through the fastest stock market crash in the history of the stock market. So, I mean, if you're a participant in the market right now in the stock market, like literally no one can ever take that away from you. No one can ever say, you've never been through a stock market crash. Oh yeah? Yeah, no. We were through the stock market crash, and we've been in the stock market crash that was literally the worst stock market crash in the history of stock market crashes. I mean, 22 trading days, markets go down 30%. That is historic, and we'll see how long that record lasts for. But needless to say, that is unreal. Okay, unreal. In the public account, I gotta say, I'm blessed. I'm thankful to only be down 14% in the public account. I mean, which is not where I want to be. But needless to say, after literally a stock market crash, after literally the worst drop in the history of the stock market in such a short amount of time, I'm thankful to only be down 14%. And especially when you take into context that one of my stocks is down 71%. Like one of my stocks is just beyond a disaster. It's by far and away my worst stock ever. I mean, it makes my GoPro investment look like it wasn't that bad. That's how bad Carnival Cruise Line is right now. Needless to say, I mean, that's unbelievable. So I'm thankful to only be down 14% in the public account, which is saying a lot. We go ahead and we look at the S&P 500 stocks that are down 50% plus in the past 1 month. Not talking 3 months, not talking 6 months, not talking year, just the past 1 month. And you're going to find a massive list. And we're talking about S&P 500 companies, some of the biggest corporations in the world, right? Some of the most profitable businesses in the world, some of the most cash-loaded businesses in the world, some of the most well-financed businesses in the world, some of the biggest employers in the world. And look at this list of stocks that are down 50% plus, guys. Look at some of these stocks down 86% in a 1 month span for an S&P 500 stock. I mean, look at this, 75%, 60%, 59%. Let's look at this next page down. Look at that, guys. Just an incredible list of stocks down 50% plus. These are S&P 500 companies. These aren't just like Russell 2K companies or something like that, or just some like speculative stocks. These are S&P 500 companies. Let's look at another page, another full page of stocks in the S&P 500 that are down 50% plus. This is historic. By the way, if you guys want to look into some of these stocks, just pause the video and you're going to look into some of those tickers there, okay? And that wasn't even it, okay? There's some more stocks there, okay? And finally, we get to the end of stocks that are down 50% plus in the past 1 month in the S&P 500, okay? Like I said, this stock market drop we've just gone through and are still going through right now is historic and will be remembered for the ages because this is unreal. I mean, unreal. I mean, it'd be weird if even 10 stocks in S&P 500 fell 50% in a 1 month. Never mind that massive list of stocks I just showed you. That's incredible, okay? Now, why is this, okay? Why is this? Obviously, we know the Roni situation, but why is this? What is going on here, okay? Well, right now, it doesn't matter what the Fed does, okay? Fed launches a slew of new programs, including quantitative easing in the amounts needed. The Fed is basically in a position where they're just putting capital out there, and basically, banks are almost forced to lend money to any business out there, almost any person that needs money short term. They're almost in a forced position by the Federal Reserve right now to lend money out there. It doesn't matter the amount of money. lend, lend, lend. And the market doesn't care. The market doesn't care about this. The market doesn't care if the Fed puts interest rates at 0%. Right now, at least they don't. They don't care if they say, everybody has to have a guaranteed loan. They don't care about that. The market doesn't care about that. Why? Let's go ahead and look at the trending subjects on CNBC right now, okay? CNBC, the biggest financial publication by far and away in the world, and look at all the biggest trending subjects. Every single one of the biggest trending subjects on CNBC has nothing to do with stock prices or valuations or what companies are doing or anything like that. It all has to do with the Roni. Every single one of the trending things on CNBC has to do with the Roni, okay? And that's not necessarily CNBC's fault, because the trending section is just a lot of people are clicking on that, and that's what people want to read. That's what people want to read. That's what they want to look at right now, and that's what everybody is focused on in the market right now. I don't care if you're talking about the average Joe investor that invests some money in the market and has $12,000 invested, or if you're talking about the hedge fund manager that has $50 billion of assets under management. It doesn't matter who you're talking about. Everybody's just focused on the Roni. How bad is it going to get? What are the current numbers? And that is where the entire focus is right now. The market doesn't care that Bank of America waives fees, defers payments on credit cards, mortgages, auto loans. The market doesn't care about that right now. The market does not care about that. The market is, this picture is basically what is going on in the stock market right now. People are putting their hands over their eyes. And when I say people, I'm talking retail investors, I'm talking hedge funds, I'm talking about, most investors out there in general are putting their hands over their eyes, and they say they don't want to see what's going on in the market. They don't want to buy anything right now. They don't want to even think about buying assets. They're closing both eyes and they're putting their hands over their eyes, and there's just pure fear out there that the monster, which is the Roni, is just like a never-ending thing that's just never going to go away, and it's just mass fear right now, okay? Investors in the market in general right now don't care that the Fed makes aggressive moves to back corporate debt markets, and the fact that it's going to be very hard to put a lot of businesses out of business in the short term, just for the mere fact that a lot of these businesses, if they go to a bank and they ask for money, they're going to get the money because the Fed's putting them in a position where you kind of have to loan the money to this company at this point in time. Literally, all the market wants to do right now, all investors want to do is put that finger on that sell button. Put the finger on the sell button. That's all the markets want to do. That's all investors are doing right now. Well, not every investor, but most investors right now are selling, selling, selling. And it's clear as day. We just saw the market just dropped 11,000 points in 5 weeks. Like, it's clear. Like we have proof of this. This isn't like opinion. It's proof that people are selling out in mass. I mean, absolutely mass. And right now, as people just click that sell button, sell button, sell button, there's almost no optimism in the market. I mean, almost no optimism. There's no looking at the bright side. There's no let's talk about 3 years from now, 5 years from now, 7 years from now, where these companies will be, where the stock market indexes will be, stocks to buy, stocks to watch. There's none of that talk right now. There's none of that talk. There's no optimism in the market. The market, the investors in the market in general don't want to hear optimism right now. They just want to hear what is going on with the Roni and how bad is it going to get, and why it's the end. And that's all that matters right now, okay? And if you want to talk about optimism, I love to look at some optimism stocks. And if you're thinking about the most optimistic stock in the stock market, like what represents ultra optimism in the market, it's Tesla stock. So let's put Tesla stock up on the screen for you there, okay? Look at Tesla stock in the past 1 month. It's dropped 50% in a month. That's the ultimate optimism stock. And that's the ultimate stock that if you have a long-term outlook, you're very interested in that stock because what they're doing with electric vehicles and obviously self-driving vehicles and the energy sector in general and how much of a game changer Tesla stock is. Tesla stock to the stock market represents ultra optimism. And when you see ultra optimism stock Tesla fall 50% in a month, you know there is no optimism in the stock market right now. There's no looking at the bright side right now. There's no looking at the glass half full. Everybody's looking at the glass empty right now. That's the bottom line. There's no looking at the glass half full. It's the glass is empty, and even if we saw some water in it, we still say it's empty. We don't care what it takes. We just want to talk about the negative, okay? And in my opinion, we do need some more pain with some other stocks before we're thinking about bottoms in the market. I think we need some more pain in big tech. I think the Microsofts, the Apples, the Googles, I think those ones have to drop more. I think once we see a big flush in those, I can tell you we're getting very, very close to a bottom once we see a bigger flush in those stocks, because those are the stocks that have held up decently well. And if those finally get hit really, really hard, that will be that last flush out that we really need. And we just need some more pain in those stocks specifically. We know Amazon's actually kind of benefiting from this situation, so there might not be a heck of a lot of pain in Amazon. There might be some, but might not be a ton. But I'm talking about the Microsofts, the Amazons, the Googles, the companies that were over $1 trillion market cap as recently as literally like a month ago. Those are the sorts of companies that we need to see more pain into. And then I think at that point, I think you're going to have some hedge fund managers. I think you're going to have some retail investors, which there's a lot of money on the sideline right now. There's a lot of cash on the sideline. I think you're going to have some of them kind of start looking with one eye open at the market. And I think you're going to have a lot of folks, and I think this could even happen within the next 30 days, where people are finally going to look at some of these valuations, and they're going to look at the indexes in general, and they're going to look at some of these stock prices, and they're going to say, you know what? I gotta start buying some stocks. The valuations are just too silly now. They're just ridiculous. And you'll slowly start to have some people, look with one eye and they'll say, you know what? I'm thinking I gotta buy some stocks. I'm thinking that when this thing does get over, we will have a bright day. The sun will come out. And you know what? Some of these stocks are going to double, triple, quadruple, 5x, 10x, more than 10x their stock prices over the next 5-10 years. And do I want to be part of that? Or do I want to just think maybe it will go even lower? And so I think slowly over the next 30 days, some investors will come out and say, you know what? Enough is enough. I've got to start buying some stocks. I think that's likely to happen within the next 30 days. And why, you might ask, within the next 30 days? Well, because the market has dropped so much and it's continuing to drop. And I think at some point, some investors are going to step in. I think Warren Buffett's probably already buying a lot of stocks, and no one can talk to Warren Buffett right now because he's basically quarantined in his house. But I think if you were to talk to Warren Buffett, I bet you he's buying a lot of stocks right now. And eventually, he will publicly disclose adding a lot of big positions out there, and that will give the market some confidence out there. If you want to take a look at something really interesting, look at this, guys. Stocks post their largest single day outflow ever on Friday, and that means just past Friday, okay, with $20.2 billion leaving the risk assets, meaning essentially investors selling out and not buying back in, okay? So this could be hedge funds, this could be either the average Joe that's got 100K in the market, or a $500,000 in the market, or $1 million, just saying, sell all my stocks. You know what? I just got to get out of this market. I just want to be in cash right now. And when you're seeing that type of activity, I'm not saying we're at a bottom, but I'm saying you're getting close to bottom activity. That is a type of activity when you know you're getting at least somewhat close to a bottom. Once again, it doesn't mean we're at a bottom here today, but you're just getting closer to that bottom. When you see that, I mean, literally the biggest single day outflow ever in stocks. I mean, that is incredible, okay? That is absolutely incredible. That's just investors fleeing the market and saying, I don't want anything to do with the stock market right now as of today. That's very, very interesting. And after the market has fallen so dramatically, there's still, pain. It becomes a lot of pain eventually. And some investors say they just don't want to take the pain anymore. The volatility index, the VIX, right? This tracks volatility in the market. This is unsustainable over a long period of time. Eventually, the VIX will calm down. And when the VIX calms down, the markets will calm down. And when the markets calm down, the VIX will calm down. And eventually that will happen. The VIX up way over 50, this is not sustainable. This is flat out not sustainable to have the VIX up there for a long period of time. The VIX can be up there for maybe a few weeks, maybe even a few months. But I can tell you, it is not natural for the VIX to be 40, 50, 60. It was, approaching 70 the other day. I think it even reached above 70 for a real quick amount of time. If we even go back to the Great Recession, the VIX was super high for a very short amount of time, and then it dropped back down, okay? Needless to say, volatility in the market will eventually calm down, and when market volatility calms down, you will start to have more and more investors start to say, okay, the markets look like they're probably starting to bottom because the markets are calming down. That will make some investors feel more confident with investing money out there, because when the markets, you see a 1,000-point drop in the market, you see a 2,000-point drop in the market, a lot of investors, that they just go into fear mode and panic mode, and they're like, I don't want anything to do with the stock market right now. When the market volatility starts calming down, then we're going to have more and more investors say, you know what? I think it's time for me to get back in this market, or start taking investing a little more serious, needless to say, okay? So we got two questions we got to answer now. What to not do and what to do in this market. I want to answer that first question first, okay? What to not do in the market right now. Now, I'm getting a lot of people saying, should I start short selling stocks? Should I start buying put options on stocks? And questions like this. And I got to say, if you've never participated, in the markets when it comes to short selling and buying put options and things like that, I'm saying you're getting into a very, very dangerous situation if you're thinking about that and you've never done these type of things before, okay? Keep in mind, the massive gains have already happened for short sellers or people that have bought put options, and that's very few people that have went ahead and, taken advantage of that. But literally, the market just dropped 11,000 points. Like, the massive gains have already happened for some of those folks. I mean, we have a guy in the private group, right? He shows screenshots every single day of all of his positions that he has open. This guy has made $2.5 million. Congrats to him if he's watching this video. $2.5 million literally like in the last, 4 to 6 weeks. It's ridiculous. He went crazy in on put options. I don't mean like crazy in. I just mean he was super confident that the market was going to drop massively. He bought a ton of put options out there. And good for him. Like, he's made a crazy amount of money. Like, literally, I remember his account was like 1.1 mil just like a few weeks ago, and it's over 3.6 million today. Okay, he made a lot of money really quick. But you got to understand, he started buying those pretty much right when the market started dipping. And he felt super confident in his decision making to do that. And he's been in the markets for quite a while. So he was able to take advantage of that. So, but if you're in some situation where you've never done this sorts of things before, and the market's already down 11,000 points when it comes to Dow Industrial Average, the risk reward, in my opinion, is not in your favor. Keep in mind, if you're short selling stocks, the big risk is you have to continue to pay interest while those shares are shorted. And the loss is infinite on the upside, okay? And if you're thinking about put options, which a lot of people are like, oh, should I start buying put options now? Keep in mind, the market's already down huge. Doesn't mean it's done going down. I actually expect it to go down a little bit more. But when it comes to put options, you can lose 100% of your money if you don't get it right. 100% of your money. That is painful, okay? This is very different if you buy, let's say you buy Apple stock at $300 a share and it goes down to $175 a share. Okay, more than likely over time, it's going to get to 300 again someday. Whereas a put option, you lost 100% of your money and it's not coming back if you did, make the wrong bet there. So that is really, really scary. And so from a risk reward standpoint, I think especially if you haven't done things like short selling and buying put options, I think stay very, very far away from that, even though it is very possible the market could continue to go down for the next few weeks. And some people think that it's going to continue to go down for the next few months. I think it's highly risky, and I think it's just something that you shouldn't even consider unless you've been in the market for an extremely long time. And even then, for somebody that's been in the market a long time, it is risky. And here's the thing. Here's what I want to show you here, okay? The stock market bottomed out after the Great Recession, or during the Great Recession, in March of 2009. The stock market bottoms, and then it starts going up from there. Keep in mind, economic data continued to get worse. Economic data continued to get worse. Unemployment rate did not peak in March of 2009. It got a lot worse. Company earnings continue to be horrible for quarters to come in the future. Yet the stock market had already bottomed. Why? Because there had been so much pessimism, so much bad news, that eventually it didn't matter to the stock market anymore. And in that March of 2009, the market bottoms, it starts going up. People are like, why is the stock market going up? This doesn't make sense. The economic data is getting worse. Unemployment rates continue to climb higher. Like, literally, unemployment rate wasn't even close to a bottom yet in March of 2009. And yet, it got a lot worse, and the market continued to climb and climb and climb. And that is something that messes with investors' minds, because keep in mind, the stock market prices in a lot of things way before it ever happens. So eventually, the bad news is priced in. Bad news continues to come out, and the markets continue to go up, okay? So bad news talk will continue for the next 6 to 12 months, but that does not mean the stock market will continue to go down for the next 6 to 12 months. It is certainly a possibility. All things are possible in the market, and who knows, we could be at Dow 14,000, Dow 12,000, Dow 10,000. Who knows what type of crazy number could be put out there. But I would say some of those situations would be highly unlikely, and a lot of the bad news is going to continue to go on. So even if the market bottoms somewhat soon, let's say it bottoms within the next 30 days, the next 60 days, 90 days, there'll still be a lot of bad news talk after that. There'll still be a lot of economic damage. There'll still be a lot of negativity, and the markets will likely have already started moving up, and people are like, what? The markets are moving up because the market's already pricing in what's going to happen over the next 6 to 12 months. That's something very important to understand. It's like, remember Arnold Schwarzenegger in that great movie, right? I mean, he's like covered in mud, and like the creature can't see him because he's covered in mud. And eventually you get so much mud on you that if you sling any more mud on yourself or try to put any more mud, what happens? It just slides off. The mud just slides off you. And that's the stock market right now. The stock market, picture it. It's just like everybody's slinging mud like crazy right now. And eventually it's going to get to a place where even when more bad news comes out, it won't even matter to the stock market because it's just covered in mud already. And any more bad news will just slide off. And it just gets to that place. Stocks get to that place sometimes with a lot of bad news. The markets in general, the stock market in general, sometimes has so much negative news come out that it just gets to a place where even if more negative news comes out, it doesn't even affect the market. We will eventually get there. The just question is, does it happen within the next 2 weeks, 4 weeks, 6 weeks, 8 weeks, 12 weeks, 16 weeks, okay? That's the biggest question, okay? So now, what do you do for the rest of 2020? What do you do for the rest of 2020 with your money, with your investments in the stock market, things like that, okay? Now, first off, do whatever you feel comfortable with doing. Don't do something just because I say I'm doing it and it might be a decent idea or something like that. Do whatever you feel comfortable with, because at the end of the day, you got to go to bed, you got to go to sleep. And if you're so worried about things, it might not be ideal for you. But I can tell you what I'm doing for the rest of 2020. I'm taking advantage of every opportunity I'm getting in this market. Every big dip, every big stock dip for companies that have great balance sheets, that have great business models for the long term. I am taking advantage of every opportunity, okay, in this particular stock market we're in right now, which is just all pessimism and just all negativity. And you got to ask yourself, you're either going to miss these opportunities and look back for 5 and 10 years and say, man, I could have been buying stocks in 2020 when this stock was this price. You could. Or you can just say, you know what, I was able to take advantage of that, and I'm happy I was able to take advantage of it. It's going to be one of those two scenarios. I can almost guarantee you that. It's going to be one of those two scenarios. You're either going to be a happy camper that you bought stocks in 2020 as the stock market continued to dip, and as countless of these stocks are down 50, 60, 70, some even 80% plus, or you're going to be in a situation where you're going to look back 5, 10 years and you say, man, I wish I would have bought those stocks. It's one of those two scenarios. Keep in mind, every dip in the history of the stock market has been a huge buying opportunity. Let's look at the S&P 500 in the last 20 years. Guess what every dip was? Was it time to buy after the tech bubble just obviously went awry? Yes, it was a huge opportunity to buy into the stock market after that had went down, okay? What about in the 2008-2009 recession? Was that a huge buying opportunity in the market after the market had fallen dramatically? Yes, it was a massive buying opportunity. That's when I've gotten involved in the market. I wish I had a lot more money. Unfortunately, I was pretty much broke in 2008-2009, so the amount of money I was investing was very small, but that was one of the best opportunities in modern history to get involved in the stock market. And what we're going through right now in the stock market, is this a buying opportunity or not? I would say if you look at history, this is probably going to be a massive buying opportunity, right? And in 10 years and 20 years and 30 years, we're going to look back and we'll say, wow, remember all those stocks that were all discounted? Remember what the indexes were trading at back then? Well, probably would have made sense to take advantage of those opportunities in 2020. If the last 20 years isn't enough for you, let me pull up the Dow for the last 100 years. Guess what every dip was? Every single dip. I mean, think about how many dramatic things have happened in the United States of America, have happened to corporations in the last 100 years. I mean, you're talking about a ridiculous amount of things. And every single major dip in the stock market in the last 100 years was a buying opportunity, okay? Every single big dip in the stock market in the last 100 years was a buying opportunity. And that is not opinion, that is factual, literally. And so I think at a time like this, where the market just continues to go down day after day after day, I think looking at something like a 100-year chart of the Dow is really, really important, or pulling up a 50-year chart of the Dow, or a 30-year chart, or a 20-year chart. I think it's kind of important because it just gives you some context that literally every single major dip in stock market history has been a big buying opportunity. And those that took advantage during that major dip were the ones that, made out with the riches in the end, okay? And you could say to yourself, maybe this time will be different. Maybe in 2020, this huge stock market dip we're having, which, it's a stock market crash, let's be honest, maybe this time maybe this isn't the one. Maybe this isn't the one. Maybe this time's going to be different. And this wasn't the big buying opportunity in 2020. Maybe it's just, stock market goes down forever or something. And gosh, I would hate to see that type of situation, okay? So, I mean, sometimes it's a little more fun to look at things optimistic than pessimistic, unless you're one of those type of people that's just negative all the time. But maybe this time will be different. And I can confidently tell you this time will not be different. And in 5 or 10 years, people are going to look back and they're going to say, gosh, I wish I was buying stocks. But the one thing you got to ask yourself is, can you put money in the market? Do you know what to look for in stocks, and can you put money in the market that you don't necessarily need tomorrow. You don't want to necessarily invest money that you're going to need to pay bills or something like that. But I know a lot of people have a lot of money sitting on the sideline that they're not using and they're not planning to use anytime soon. And so for some of those individuals out there, I mean, it's a pretty interesting time to be buying. I can tell you, I'm putting my money where my mouth is. I've invested a lot of money over the last several weeks. And if the market continues to go down, I'm going to put some crazy numbers into the stock market when it comes to my investments. Because at the end of the day, this is a massive buying opportunity in a countless amount of great companies. And in 3 years from now, 5 years from now, 7 years from now, I'm going to be able to look back and I'm like, I doubled my money on that one. I tripled my money on that one. I quadrupled my money on that one. I 5x my money on that one. I 10x my money on that one. There's going to be the amount of money I will make, in 3 years from now, 5 years from now, 7 years from now will be astronomical because of what I'm taking advantage of right now. And it's buying on these huge dips in the market and tons of great companies, a lot of them with some great balance sheets out there that are just getting absolutely devastated when it comes to their stock price. And so, it's your decision what you want to do, but I can tell you what I'm doing. I will be taking advantage throughout 2020 until the weakness is over, and then we'll start to climb out, and then the investments will start bearing fruits, and it's going to be a lot of fun in that. And so, anyways, let me know your opinion down there in that comment section. As always, smash that thumbs up button if you enjoyed today's video and kind of going really in depth. I think it's like a 30-minute plus video, so hope you enjoyed the in-depth nature of a video like this, and let me know if you enjoyed it down there in that comment section. Thank you for watching and have a great day.